Hello, so today we're going to be looking at Goldman Sachs, which is a financial services company. So, what does Goldman Sachs do? So, it provides financial advising services for firms and provides services to local, state, and federal governments. And it manages funds for institutions, invests capital in businesses, and these are the NAIC codes for Goldman Sachs: investment banking and securities dealing, commodities contracts dealing, investment banking, commodity traders, and contracts. Market share. I used information from the Fidelity website to determine the size of the sector, and I selected the diversified financial services sector and found that it is 517.76 billion, and Goldman Sachs total revenue for 2019 was 53.922 billion. So to determine the market share, I divided Goldman Sachs total revenue divided by the sector size, the financial services sector size, and found that Goldman Sachs has a market share of 10.41%. That's probably because they're a global company and have been around for quite some time. Let's do an assessment of the company's upper management using information found on the Goldman Sachs website. The Chief Executive Officer, David Solomon, joined Goldman Sachs in 1999, served as a global co-head of the investment banking from 2006 to 2016, and was also previously the global head of the finance group. The Chief Executive Officer, John Waldron, has held multiple different positions since he started with Goldman Sachs in 2000. Some of the things he has done include being the co-head of the Media and Entertainment Group in IBD from 2002 to 2005, also being the co-head of the Leverage Finance from 2005 to 2007, and the global co-head of the Financial Sponsors Group from 2007 to 2009. This shows that John Waldron has extensive management skills and great qualifications, which have allowed him to hold high-level positions throughout the company. The Chief Financial Officer, Stephen Scher, joined Goldman Sachs in 1993 as an associate in the Financial Institutions Group, and in 1996 he transferred to the Emerging Markets, Capital Markets in the Fixed Income, Currency and Commodities Division. Another thing he did was he was named Managing Director in 2001 and Partner in 2002. And he also served as the Chief Operating Officer for the Investment Banking Division from 2005 to 2007 and head of the Americas Financing Group before serving as a global head of the Financing Group from 2008 to 2014. Also, Stephen Scher served as the Chief Executive Officer of Goldman Sachs Bank USA and the head of the Consumer and Commercial Banking Division from 2016 to 2018. So all of these upper management individuals have been for the company for many years and really understand the company, and you can count on them to make very good decisions for the company. So I have confidence that they have good skill sets to continue moving this company forward and increasing their sales revenue. So now let's talk about the horizontal analysis of the income statement for Goldman Sachs. From 2017 to 2018, Goldman Sachs reported an increase in interest income of 50.07%, and from 2018 to 2019, it reported 10.46% increase in interest income. Although interest income increased by 50.07% between 2017 to 2018, interest expenses from 2017 to 2018 increased as well by 56.29%. And from 2018 to 2019, interest expenses increased by another 9.2%. If we look at the total expenses from 2017 to 2018, the company reported an increase of 22.68, and from 2018 to 2019, it reported an increase of 4.71% in total expenses. But since it had major tax cuts between 2017 to 2018, it reported a decrease in the amount of taxes that it paid by 70.46% from 2017 to 2018. While from 2018 to 2019, it reported an increase in taxes of 4.7%. So now we're looking at the balance sheet for Goldman Sachs. And this will be the horizontal analysis report. So from 2017 to 2018, we had an increase of 18.62% in cash and equivalents, while from 2018 to 2019, we had an increase of 2.3%. Total assets from 2017 to 2018 increased by 1.64%, while from 2018 to 2019, total assets increased by 6.56%, which is pretty good because you definitely want your assets to be increasing every year. Let's see. On the other hand, total liabilities increased by 0.85% from 2017 to 2018, while from 2018 to 2019, total liabilities increased by 7.26%. As far as total liabilities and equity, from 2017 to 2018, they increased by 7.12%, while from 2018 to 2019, they increased by 3.21%. So in this chart, we're doing vertical analysis on the income statement. it looks like we had a net income for 2019 of 8,466 million compared to 2019 where we had 10,459 million, and in 2017 we had 4,286 million net income. From what we can see here, in 2018 we had a higher total revenue with 52,528 million, and in 2019 we had a larger total revenue of 53,922 million, but it seems like they had higher expenses, which led to lower net income. Because of all the expenses in 2019, Goldman Sachs had an interest expense of 17,376 million, which equals 16.08 of total expenses for the year, versus in 2018 where interest expenses were 15,912, which equaled 15.42%. While in 2017 we reported only 10,181 million in interest expenses, which equaled 12.1% of total expenses. And looking at the total expenses here, in 2019 we reported total expenses of 108,080 million, while in 2018 we reported 103,217 million, and in 2017 we reported 84,186 million. So as you can see from these 3 years, it seems that their expenses are increasing every year from 84,000 to 103,000 and 108,000 in 2019. If we look at the amount of taxes that they paid, let's see. Goldman Sachs paid 6,846 million in 2017. They had a huge tax cut because in 2018 they only paid 2,022 million, and in 2019 they paid 2,117 million in taxes. So that was quite a major tax cut between 2017 and 2018, even though they generated more revenue in 2018 versus 2017. They paid much less taxes in 2018 and 2019. Now let's look at the vertical analysis for the balance sheet of Goldman Sachs. First, let's look at the current assets section, where the classification of other assets accounted for 44.72% of total assets in 2017, while in 2018 Other assets were 45.47% of total assets, and in 2019, this number decreased significantly to 8.34% other assets to total assets. As far as securities, in 2017, 20.82% of total assets were securities. And in 2018, this number went down to 14.52% were securities. And this number significantly increased from 2018 to 2019, since in 2019, securities accounted for 55.93% of total assets. As far as current liabilities, debt and leases accounted for a large portion of the total liabilities. In 2017, debt and leases were 32.66% of total liabilities. In 2018, debt and leases accounted for 32.44% of total liabilities, and this number went down in 2019 to 28.47% of total liabilities. So let's look at the different ratios for Goldman Sachs. So for the net working capital in 2017, we reported 82,243 million. In 2018, this number went up to 90,185 million, and in 2019, it was 90,265 million. The current and quick ratios for Goldman Sachs are the same, since there's no inventory to subtract. In 2017, the current ratio is 1.1. In 2018, this number went up to 1.11, and then it went back down in 2019 to 1.1. Inventory turnover ratios, I did not have any data since Goldman Sachs is a financial services company and does not sell physical products. So no sales information was found either. In accounts receivables for 2017, days in receivables, we got 164.69 days. In 2018, this number went up to 217.3. And in 2019, this number became 204.4 days. Fixed asset turnover, in 2017, we got 2.8. In 2018, we got 2.87. And in 2019, this went down to 2.46. For debt degrees, in 2017, we got 1.1. In 2018, it became 1.11. And in 2019, this number went down to 0.91. Let's see. As far as price to earnings ratio, in 2017, Goldman Sachs reported 9.12, and it went up in 2018 to 25.53, and in 2019, it went slightly down to 21.18. between Goldman Sachs and two other major financial services companies. In 2017, Goldman Sachs reported 9.12 earnings per share, while Berkshire Hathaway reported 18.21, which is almost twice that of Goldman Sachs. And Charles Schwab for that same year reported only 1.61. If we look at 2018, Goldman Sachs reported 25.27, while Berkshire Hathaway reported only 1.63, significantly lower than 2017. And Charles Schwab reported 2.45. And in 2019, Goldman Sachs reported 21.03 earnings per share, while Berkshire Hathaway reported 33.2 and Charles Schwab reported 2.67. So it looks like Berkshire Hathaway had a rough year in 2018, but recovered in 2019. Now let's go on to the next metric, net revenue. In 2017, Goldman Sachs reported 4.286 billion, while Berkshire Hathaway reported 44.94 billion, and Charles Schwab reported only 2.18 billion. So you can see that Berkshire Hathaway reported roughly 10 times more in net revenue than Goldman Sachs for 2017. But in 2018, Berkshire Hathaway only reported 4.021 billion, and Goldman Sachs reported 10.459 billion, while Charles Schwab reported 3.329 billion. In 2019, Berkshire Hathaway increases net revenue to 81.417 billion, and Goldman Sachs was at 8.466 billion, while Charles Schwab reported only 3.526 billion. So you can see a major recovery for Berkshire Hathaway between 2018 and 2019, with only 4.021 in 2018 versus 81.417 billion. And as you can see, Goldman Sachs from 2018 to 2019 went back down roughly 20%. So now let's talk about the Goldman Sachs timeline, some of the major events since it was established in 1869. By 1974, they had two European offices. By 1983, it had presence in Asia by opening offices there. In the 1990s, it opens offices in emerging markets. And in 2019, it came across a gender discrimination lawsuit which financially affected it. In 2020, Goldman Sachs is being affected by the COVID-19 since some of its investments have been decreased in value due to the slowdown and shutting down of the economy, of different economies in the US and around the world to prevent the spread of the virus. And currently in 2020, Goldman Sachs has offices in many countries all over the world. So it is now a global company and not just set in one individual country. Hello, guys. So let's talk about the technical analysis for Goldman Sachs. So prior to peaking at 250.46, the resistance level that I was using was 220.83 with a support of 197.87. But with the coronavirus outbreak, we can see that it has now broken support and has reached now a new low of $170.16. This is a 1 year chart, and it displays the candlestick charts, and you can see the increase of volume when you start to see the downtrend. So people started to sell off. That's probably the cause of the drop. If you look here at the RSI indicator, you can see that from the peak to where it is now, you can see the continuing decrease in the relative strength index. And you can also see your moving average convergence divergence, or MACD here, which is also dropping down. And you can see the downtrend that started back in January 24th and has continued on to this day, being March 10th. Also, after that peak, it seems like there has been a reversing trend. As you can see, the downtrend beginning here and continuing all the way down. Prior to the coronavirus outbreak, you can see how it would start at the bottom, go up, going down, a little bit down from support, but will gain momentum and initiate another uptrend. And leading to a high close to the support and going back down. And again, you can see it in this is between a couple months, well, roughly like a month. You can see how it moves. And you can see the uptrend again, another downtrend, and then an uptrend, all the way to the peak where everything just started falling down. For Goldman Sachs include adequate capital, sufficient liquidity. It has sufficient liquidity since it can sell its financial assets quickly without losing a lot of its value. Uh, some of the weaknesses include lawsuits and cost efficiency. Some of the lawsuits that it has experienced in recent years has been a gender inequality lawsuit and gender discrimination lawsuit. Some of the opportunities are the strategic initiatives and corporate tax cuts in the US, since they had a major cut in 2018, major tax cut in 2018 and 2019. And also, some of the threats include competition from other financial firms, risks related to identity theft and hacking, since they store a lot of customer data and financial data for different companies that they work with. Uh, to have in your portfolio. So some of the pros of Goldman Sachs is that it has a strong balance sheet, overall good price stability. But as far as what I would do for investing in this stock, I would look at buying near 12-month support levels and trying to sell near 12-month resistance levels. But with the COVID-19, I would exercise caution on buying any stock and try to buy it as low as possible. Based on a chart obtained from Webull, from the Webull platform, trading platform, based on 24 analysts, 16.67% say that Goldman Sachs is a strong buy, 37.5% say it's a buy, 45.83% of the analysts say that Goldman Sachs is a hold, 0% say that it's underperforming, and 0% say that it's a sell. So based on these ratings, Goldman Sachs wouldn't be such a bad option to have in your portfolio, as long as you try to buy as close to support and sell towards resistance levels. Thank you.